Sorry, guys, I just got a bit distracted there. I've got the news in my ear and just slightly missed the open. Sorry about that, Angel. I'm in now, and we should be all good. I am looking at the FTSE for a short actually here, which I'm going to take under this bar. Now I'm just going to check the 5. Yeah, I'm going to trade the FTSE here, and it is a short, and we'll see what we get. Market's not yet open, so it might be a bit of a sticky ride, but I think there should be some resistance here. Now I'm going to keep things pretty tight, so I'm going to move stops up here, but I don't really want it to break through this level here. So let's we'll put those in one moment. Just a little bit of volatility coming in. So I'm going to put my stops up at the highs there. But as I say, this is the area, so I'm not going to risk too much on this if it starts to go in the opposite direction. So let's just put these levels in for you guys.
Hey, Ash, how are you?
Hey, Orlando, how you doing, buddy?
I'm fine, thank you, mate. Good
stuff. Right, we've got to trade straight away as we open up here.
Yeah, I can see that.
Yeah, so I'm looking at this short, and the market's been pretty hot. But really, what I'm playing here is more of a range. I might well get back in here if it starts to break to the upside. I just don't see us going through. That's more what this is about. So it's a UK 100, and it is a sell, and the price is at 59.92. The stop loss currently is stop loss is at 60.35, and we will potentially look to trail, but there's a soft stop here as well at 605. So if it breaks through 605 and holds up beyond that level, then I don't really want to be in this trade anymore. So even though that would be the risk to that particular position, that's like a hard stop, and this is our soft stop level.
I like that trade. Actually, yesterday I shorted the DAX myself, but the thing is that there was no follow through on that move.
Yeah, it's interesting, isn't it?
Rallying.
And now it's what? Sorry.
Equities are rallying at the moment, and
they are.
Yeah, and with following your short on the FTSE, I do have a short on the pound myself.
Okay,
given the fact, given the fact that tomorrow is the deadline for the Brexit, right?
Yeah, yes, it is. Yes, well, I mean, it's Boris Johnson's deadline. Yes, you're absolutely right. And it doesn't look like they've got any sort of deal going on. So, yeah, if you want to take the screen, mate, you can show us that.
Yeah, for sure. Hold on. So can everybody see my screen? I think so, right?
Yeah, we got your screen.
Okay, cool. So this is my trade, mate, on the pound versus the yen, right? Actually, I've been looking for this short for a while, since last week, where I traded a short around these levels, and I got stopped out on Friday's rally, right? But the thing is that, given the fact, I mean, the current reality on the UK, right, and with both parties not giving up on their side, and I mean, it seems that we're going to get on a no-deal Brexit. Okay, I haven't read too much about it myself, Ash, and I don't know if tomorrow is the deadline for the UK or if it's Boris Johnson's deadline.
It's Boris Johnson's deadline, yeah. I mean, it's something that he's put in. He said, he wants to make sure that there's a deal by the 15th of October, and if there's not, then that's kind of it. It's kind of all done.
All right. So give me just a second, please.
No problem.
There you go. So basically, let me show you my setup, all right, for this particular trade, because I do believe that there's a lot of potential still to the downside. So let me go to my GBP pairs thingy right here. So this was my setup, mate. Okay, and this was my trade idea. The thing is that on a technical side, we were testing this very important base. The way that I see it is once we broke to the upside, the 138 just held very nicely, and this is where we got buyers to get us to the 142, right? And that is the thing that I like about the pound versus the yen. When it trends, it trends very hard. And if you time your trade correctly, or if you time your trade just fine, you might get some sick risk to reward ratios. The thing is that I do believe that that today is going to be a very volatile day. Okay, given the uncertainty on the negotiations with the EU. But also, I was going to give up on this idea, but yesterday we got some employment numbers out of the UK. The unemployment rate had a super big spike. I mean, and I saw this. This is a huge spike on unemployment rate on the UK. Okay, and yesterday the pound didn't quite move after that. After that news, it was until later that it started to fall. Now, I right now this trade is gone, of course, but my targets would be around the 133, 133.50, 134, not to be too greedy, right? Because we do have this other base that is quite important. Actually, it's a whole level right here, as you can see, which is the level that we retested before continuing on this very choppy uptrend. And that's the other thing, right? I was looking at price action itself, and the moves to the downside were very clean, and this move to the upside was so choppy that it looked very much as like a pullback, which is actually what happened, right? But I am undecided just yet if given the fact of the uncertainty right now in the UK, if I want to let this one ride, because if there is I mean, a single notion of a no deal exit, the pound is, I mean, I believe that the pound is going to flush very heavily. And I do want to be still in that trade. I don't know what you think about that, because the thing is that it is so uncertain. Nobody knows what's going to happen. That they might just strike a deal at the end, at the last hour, and announce it, and then the pound is just going to fly. So I'm looking on how to protect the open profits,
Yeah.
and yeah, and that's the reason that I'm going to be babysitting this trade throughout my session.
Mate, I'm completely and utterly with you on that. I mean, I've got a short on the euro pound, for the very same reason. I think it is one of those things that you kind of end up having to speculate on whether there's going to be a deal or not, and I just don't see how they can't get a deal. I mean, do you know what I think is likely to happen? I think
Mhm.
tomorrow. Because Boris Johnson really, he's the king of U-turns, and
Yeah,
he's the one that's come out and set this deadline in place, the 15th of October. And if he's going to walk tomorrow, then all bets are off for the pound. The pound's going down, and it's going down for a while, and it's going to go down pretty hard. But I wouldn't be surprised at all if they don't reach a deal tomorrow, but he softens his view and says we've made enough progress for the negotiations to extend into the end of the year, which probably puts the pound back on hiatus, and we probably don't get the explosive move that we are predicting, if you like. So
definitely, I agree with you on that one. I mean, if that is the scenario that plays out, I don't believe that we're going to get any reaction out of the pound It
Yeah.
might stop it might stop the flush or the bearishness. But I don't believe that by saying anything, he will be able to pump the pound up.
No, I agree. I agree with that. I agree with that. I think we're probably just caught in a bit of a range with it in the end. But yeah, I mean, it's been a pretty good move already, hasn't it, with the pound? And as you say, how you protect the profit and still manage to take advantage of the fact that the likelihood that they get a deal isn't there is the big
Hmm.
question, isn't it? And I guess it's just about taking profits on the way
Yeah,
and
exactly,
making sure that there's part of the trade that's far enough away to not get hurt if there is all of a sudden a big turnaround, but by the
exactly.
same token allowing it to go far enough to take some profit. So I guess it certainly looks like we could rally, from not rally, sorry, could go get weaker on the pound right up
Yeah.
until the right up until tomorrow, really, until we get an announcement of some sort,
Hmm.
because it's looking pretty weak. And also, we've just got this pretty broad countrywide lockdown going on, which again
Yeah,
is not good for the
the three
pound.
tier, right? The three-tier lockdown.
Oh yeah, yeah. Which again is going to put pressure on the financial system and the Bank of England and the like to make sure they can get something sorted. Make sure they manage to put some kind of package in place for businesses. If they don't get
Definitely.
that, then you know.
And you know what? That new lockdown rules, that three-tier lockdown rule, was another reason that I was really looking for that pound short,
Yeah,
because of what you just said.
yeah,
I read about it. I read about it. I read an article about it just to educate myself on what really was that. What were the rules behind that new lockdown system, right?
yeah.
And what I didn't read is a timetable on it. It doesn't have a timetable on it, right? Apparently,
No.
there's no actual date on which this lockdown is going to end. This new measure is going to be eased only if the cases or the new coronavirus cases drop. Is that correct?
Yes, 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 it is. I mean, there is a proposal by the opposition leader to have a full lockdown. They call it a break, yeah, system break, where if they get a full lockdown during the half-term period when school children are off anyway, and people will probably not be at work, they think if we can have a full lockdown there, we might get a circuit break and actually manage to just curb things a little bit. But that's already been thrown out by Boris Johnson because it was from the opposition. So
Yeah,
yeah, there's plenty of issues out there, for the UK, and subsequently, it does mean that the pound potentially could continue to sleepwalk into disaster zone. But this is one of the reasons that I don't see why we would get a no deal. I don't see the logic from government to get a no deal. And I think if he looks to walk away tomorrow, then he's saying that he's happy with an Australian style system. But if he's happy
yeah,
to walk away tomorrow, after we've got so many issues here and the amount of debt is just rising, then I think it would be extremely irresponsible and ultimately quite quite
damaging.
quite damaging. Yeah, and quite unlikely, I would have thought. Which is why I'm kind of happy just to hold on to the long that I've got with the pound against the euro. But I could be well and truly wrong on that. But the key really for me is that I've probably traded it slightly different to the way that you have, in as much that I've just cut the leverage right down.
Okay.
And it just gives me a lot of room to kind of make a decision on it. I can allow this one to breathe, which is what I'm doing with it. So we'll see. It could go either way. I just can't see the logic, and because I can't see the logic, I just think that with Boris Johnson, as I say, being the king of U-turns, then there might well be just a bit of a hiatus. Now, if there is, I don't really want to be in this trade anyway, because my
Yeah.
trade is all on the fact that there will be a deal. But
Okay.
um, but it, it doesn't look to me like there's going to be a deal tomorrow. It doesn't look to me like they're going to make enough progress by tomorrow to get this thing
Yeah,
done.
and this issue has, I mean, it has definitely been too politicized. That's the word, right?
Yes,
Yeah,
yes,
in the sense that, I mean, the negotiations are no longer looking for the health of the economy and the welfare of the citizens, right? It's all a political game right now,
yes,
I
yeah,
reckon.
absolutely, absolutely, yes, it absolutely is. But it's the good thing with the pound in some respects is that at least by this time, well, not even this time, but in 3 months' time, at least we get some genuine clarity of where the pound is going.
Mhm.
We just don't know where the pound's going to go, and until we get Brexit resolved, one way or the other, it doesn't really make any difference which way. Then we just don't know what the state of the country is. We don't really know what the state of business is over here either. And if we get a Brexit, the pound, will likely weaken, but at least we'll get a clear direction, clear idea of direction. Right now, it's just it's all about Brexit, whereas other nations are at least able just to focus on, well, I mean, just to focus on, but at least it's talking about stimulus to do with the pandemic, rather than
Mhm.
this other issue that we got going on. So pound's an interesting one, mate, and it's one of those, isn't it, that if you've got a trade on and you can manage it right, then it's well worth playing it. If you're not in the pound, then I would have thought the next 24 hours would be the wrong time to be trading it.
Yeah, most definitely. I agree with you on that one. I mean, if you are not on the pound pre this move that we are seeing right now, it would be, in my opinion, really too aggressive to try to
Yeah,
trade it in the middle of this move, and actually quite risky, you know.
yeah, I totally
Hello?
agree, mate. Totally
Yeah.
agree. Far too risky. Um, What do you think of the dollar, mate? I mean, I watched yesterday. I was looking at silver, and just to kind of look at giving the giving my portfolio just a bit of diversification. I was looking at silver, and I'd loved silver for a long, but as I was looking at it, I was thinking, actually, you know what? This is ready to come down here. And whether it's to do with silver itself or more likely to do with the dollar is a big question. But the dollar did
Hmm.
get a boost. I started looking at it, and the dollar got a bit
Yeah,
of a boost. We saw it going up against the euro, against the Swissy, against gold, against silver. Um, it
against
still appears
everything.
to me. I mean, you've got that level. Is that the dollar index there?
Yeah, that's the dollar index. Right at the 93, we got that boost yesterday.
We got the boost yesterday. Now I was looking at the dollar Swissy, um,
Practically the same.
as yeah, and it should look the same. Where is it? Where's my dollar Swissy? There it is.
Yeah,
Okay,
I mean,
so
it's practically the same. I mean, the correlation between the dollar Swiss and the DXY has been almost perfect lately.
yes, it has. Do you know the issue that I've got with that, and I can see that you've got a similar. Actually, my pattern is slightly different. Is that a daily chart you've got there?
This is the 4 hour chart, mate. You want the
That's the
daily?
4 hour. No, the 4 hours right actually. But it's interesting because my dollar Swissy looks different to yours. Yeah, it looks a bit
Actually,
different. But do you know the level that I've got as well? If you've got a dollar Swissy chart,
this is
there
I
is.
mean, comparing the dollar Swiss and the DXY. The dollar Swiss is the line, the orange line. It's practically the same, mate.
Yes, it is. Yeah, so that's pretty good. Okay, cool. Well, actually, you can draw it then from maybe. Yeah, you see the where the dollar where the dollar Swiss is, I think maybe a little bit clearer in some respects. If you look at the 1st of September, if you could draw a trend line on that orange line from the 1st of September,
A vertical line, do you want?
no, a
No, no,
trend
no.
line.
Okay, cool. From the 1st of September right here.
Yes, and then extrapolate. Yeah, on the orange line. So follow the orange lows
This
instead.
one.
Yeah, so we'll look at the Swissy.
All right.
That's the interesting level there for me.
Okay.
And
Let me just thicken
it
that out for you, mate. There.
Yeah, yeah. So that sort of says to me that that's the breaker. If we can get through there, and I've also, and actually, it's interesting with the dollar with the dollar index. You've also got the same kind of thing where, and it'll bring you this pretty much the same price. Where if you go to the yeah, if you go to the 4 hour chart and you go to
This,
the high on the 30th of September.
the high on what was the date?
30th of September.
30th
Yeah,
of September. Right here?
one back.
No,
That one.
here.
Not that one. The one in the middle of those. There.
Yes, this
Yeah,
one.
there. Yeah, and then draw. Yeah. So I get a similar kind of level. So for me, it needs to take that out, and if it can take that out, then I think the dollar's probably going higher again.
Mm-hmm.
But I see your wedge as well. I mean, I think the wedge is also relevant, and it's an interesting one because it does depend on what you trust. What I like about your wedge actually is that it should, if it comes back, it should coincide with an inverted head and shoulders, because that would
Yes.
probably form a right shoulder down there if it was to come back. So
This.
I, yes, yes, yeah, which looks like the sweet spot for me. That looks like a pretty good level if it can come back there. I mean, it will have the trend line to get through, but there's every chance it does that, I would suspect.
Yeah, and the thing about this one also, mate, is let me go to a 12-hour chart. We really, really, really are in a very, very strong bearish structure, which got rejected right here. I mean, the Swiss is too, right? And until we break with this structure, in my opinion, we are still very much bearish
Yeah.
on a bearish market, right?
Yes. Agreed.
But this boost yesterday, I mean, this rally yesterday that is continuing right now gives hopes for dollar bulls, in my opinion. But
Yeah.
again, we do have some massive levels to the upside. The 94.80 is just historically strong. I mean, just look at this inflection point in the market, mate. I mean, it's incredible. After such a bearish ride, this is where bulls took control. And right here, the retest, bulls were unable to break it. I mean, this was also very strong because we were testing the structure, right? But I mean, in my opinion, even if we break with this very structure, the true make it or break it for the dollar to me is this the 94.80, looking at the DXY, of course, but the dollar Swiss is quite similar. I mean, same price structure, same development in the price action, and same levels that are testing. So
Yes.
yeah, there's, in my opinion, there's still some work to be done by the bulls, but it looks very promising.
Yeah, I thought it was quite interesting as well that the dollar Swissy does look like that, because the euro is the best proxy for the dollar index, and it's the dollar Swissy, obviously because it's euro dollar rather than dollar Swiss, so it's the right way round. Looking at
Mhm.
dollar Swiss, if you're looking at the dollar index, but it just kind of, I think this clearly shows. So if you look at the dollar index and then you look at the euro, look at the dollar Swissy, and then recognize the fact that the euro makes up the biggest part of the basket of the dollar index, it just
Yeah.
shows how closely correlated that the euro is to the Swissy. It
That I
shows how
haven't thought
tight they
about it.
are.
I hadn't thought about it that way, but I mean, I completely agree with you.
Yeah, I mean, I don't know whether that means that range traders. I mean, really, the dollar Swissy should be Jeff's absolute best friend as a range trader. I would have thought it should be pretty good for the slingshot. I don't know. I've never asked him, but I would have thought it'd be pretty good for the slingshot if you're looking for ranges. FTSE 100 is just easing a bit and holding that pivot. So I'm going to take half the profit and move stops to just above the highs that I discussed. If anybody needs me to go through that in a bit more detail, let me know. But I'm going to take half the profit and move the stops to the highs just to make it a break even. Yes. So yeah. So the dollar. So what are we thinking? I mean, should we be looking for upside dollar, or should we be? Should we be?
I
Well,
well
I
right
guess, and
now.
why? Why is the other question, isn't it? Why should we look
Exactly.
for upside dollar?
Exactly. I mean, really, there's no. I cannot rationalize the idea of
Yeah.
getting myself into a bullish position on the dollar, right? Fundamentally speaking, of course. But and also, I mean, and also made technically speaking, I wouldn't be a dollar buyer right now. I mean, to me, I mean, if I were to get on a dollar buy, I mean, let's look at the Swissy, right? The dollar Swissy. Hold on, where is it? I don't trade the dollar Swissy, so I don't even have it. So, but I mean, what other market can we? I'll just put it here. Right. What I was going to say is actually it's not wrong in the sense that uh, the move to me has been missed. But if you look, I mean, if you look at this, this is pretty slam dunk continuation pattern.
Mm,
If you're into that kind of stuff, right? But I mean, if the dollar continues to push higher, this would be a great risk to reward ratio trade. But yeah, but the thing is that I'm not the biggest fan on getting into a US dollar bull trade or long trade at the moment. You know, I'm not convinced. I think that there's other markets that I'm gonna say I trust more, but it's not that I trust more, but that I understand better at the moment why they're
yeah.
moving the way they're moving.
Yeah.
So it's a little bit tricky to me to think of on getting on a US dollar long position on any market, you know,
Yeah.
because uh, I find it quite risky at the moment. You
Yeah.
know,
Yeah, I'm with you on that, and I think that's quite an important statement. You know, just to kind of say about understanding more. You know, to understand why something is moving, and when is part of the. I think is part of the road to success. You know, really understanding in what you're trading, because everybody, you know, we all want to trade as many instruments there are as possible, but it does, which is absolutely fine, but it does mean that your workload increases exponentially because you've got to go and research that particular
yeah,
instrument, you know, and product that you're trading. So,
I
so
completely agree with you on that one. And
yeah, I
actually,
mean,
and the best thing to do actually is just to understand completely one market and rock that market, you know.
yes, yes, and it's that thing, isn't it, that uh, there's no real way of us knowing why something's moving. We can only speculate, you know, which is why, you know, so many people put so much weight on technical analysis. You know, so a friend
Mhm.
of mine was saying yesterday that he's reading a book, and the guy was saying that fundamentals don't mean anything, and
Wow.
technical analysis tells you, you know, everything that you need to know. Um,
I don't agree with that statement at all, mate.
Oh, do you know, we got into a big discussion about it. I was like, well, how can that be the case? I was like, well,
Uh,
surely Brexit has shown you that fundamentals mean everything, because why would the pound
exactly.
weaken? It's not weakening because the charts are kind of at a resistance level. It's weakening because we're just about to walk into a cliff edge.
Yeah,
Um,
and now just imagine that someone that just trades volume would get into that conversation with you too. Oh my God, that would be
well,
a
actually,
black
he mentioned
hole of a
volume.
conversation.
He did mention volume, funnily enough. But yeah, I thought you know, I don't know how somebody could. I mean, I'd have to read this guy's book to know exactly, you know, because he may have misinterpreted, but I couldn't believe that somebody that's written a book about trading would make
Mhm.
such a ridiculous statement. It just,
Yeah,
you know, because I was like, it's completely the other way around. It's the fundamentals that matter, and the
exactly.
charts that reflect what's going on with the fundamentals. Um, you know,
Yeah, I mean,
not that.
that thought process to me is inverted in the sense that, well, the way I mean, the way that I look at this is I research a market, I understand the fundamentals and why it's moving the way it's moving. Then I choose the product that I'm going to trade, and then I look at the technicals to get
Yes.
an entry, to get a good risk
Yes.
to reward entry.
Yes, yes, well, exactly, and that's got to be the way round, and I think that is well, that's certainly the formula I've been employing for quite some time now,
Yeah.
and I prefer it because if you're sort of if you research a product, something that I'm quite interested in right now is a company called let me just look at on my list. Oh gosh, where are they? Oh, here we go. Is it Oh, it's Glencore. Glencore. I'm really interested in Glencore. Now,
Myth Edition, is that the one?
it's what? Sorry.
No, I'm sorry. I'm sorry. Go ahead. Go ahead.
Just they are a energy company.
Uh-huh.
And I
Okay.
suppose the reason I'm interested in Glencore is that I'm looking at energy and I'm thinking, well, we seem to be going more towards renewable energy,
Yeah.
and Glencore are big in the space of non-renewables, and most specifically, that they've got a kind of big holding in coal. And reading up on things like that, reading up on renewables, and you don't have to be sort of like that well read to
Hmm.
recognize that non-renewables are going south.
Yeah.
And then you can sort of like delve deeper in which non-renewables are likely to be worse affected, and you say, well, gas probably will do okay,
Cool.
but
Is the
the
one,
likes
right?
of coal, because gas isn't as dirty, is it? But you look at the really dirty ones like coal, and I just can't see the future for it. So a company like Glencore all of a sudden starts to look interesting to me, and then I want to go into the balance sheets and everything else, and that's the process for me. I
Yeah,
sort of like
definitely.
I try and think about a world view to start with, and we can do the same with currencies. It's the same thing, and I think that
Most
if
definitely.
we'd looking at the pandemic, the dollar was an interesting one, really, but it's a really good lesson, I think, the dollar, because if we're looking at the pandemic hit, and then all of a sudden the US goes into huge declines. The Bank of America, not Bank of America, the Fed come out and they have to stimulate. You have to add stimulus. So what's going to happen to the dollar? And that's an easy route into the thought process of what I would like to sell.
Yeah,
I when the pandemic hit, I bought Netflix. When it hit, I bought a company called Ocado, which do an online food delivery service. I bought Fresnillo, the gold stock as well. I didn't hold on to them for anywhere near long enough, but
yeah,
the
me
reason I
neither.
bought yeah, well, this is the difference between a trader's and an investor's mentality, isn't it? As an
Yeah,
investor, you would have just put it into a broker that just buys the physical share, and you'd probably ignore it, because you're looking
exactly.
for longer term returns. But as a trader, we're in front of charts all the time, so in a way, the freedom to be able to kind of hop in and out is one aspect that is your best friend, and at the same time it can be your worst enemy, because you end up kind of cutting too quick.
Yeah,
um,
and because the way that we think, mate, that we're always looking for the fundamentals that move a market,
yes.
that same thought process is, I mean, if let's say that you get on that, you get short on that company, yeah, right, that you were just talking about, right?
Yep. Yep.
You're going to be looking at the charts, and yeah, this is the next level, and then okay, what's the balance sheet of this company right now? I mean, and imagine they announce that they're going to move half of their R&D to renewable energy or whatever. Then you start to think, okay, that now my short idea doesn't look as happy as it
Right.
did before. So maybe I'm gonna trim this a little bit, and you can get into that cycle being a trader and always thinking
Yes.
about that. Now, I mean, it's a different mindset than being an investor. That I mean, I have never invested in my life, in the sense that I have never held a position for months or
Yep.
years.
Yep.
That is just not my mindset right now.
do you know do you
But
know do you know where I think where the market is missing a space? Now somebody might correct me on this, maybe there is something out there, But where I think a market is missing a space is a broker who provides you the ability to trade, but also earn dividends if you are a buyer of a stock. So the problem with using an investment broker is that you can only buy. You can't sell. You can't short a stock. I mean, you can, but it's quite complicated. But if and if you go to a normal trading platform, if you were to
Yeah.
buy, let's say you bought the FTSE All Share Index or the S&P, you don't get dividend payment. All you're getting is the capital gains up there.
Yeah.
So if there was a company that offered, if you bought a stock like Glencore and it paid a dividend, you get some of that dividend because you're buying a chunk of the stock. But you could also go and short something, like Antofagasta or something, and you don't get the dividend there because you're going short. But a nice a broker that paid a dividend would be brilliant, because you would actually then change from just being a trader where you're just looking for the movement to more of an investor, because you're looking for also extra kickback, a bit like what Shukri talks about with when he buys cryptocurrency and he gets the rewards. I can't remember what they're called now, Shukri, but he gets the rewards when he stakes his coins. But yeah, so I think a broker that offered that would be brilliant. I'd be right. I'll be all over that. I'll be on top of something like that. I'd really like it.
But the thing is that, I mean, they would be pushing their clients to trade less and hold more, so
Yes,
their fees would I mean the would be less.
that's very
Uh,
true. Yeah, they would.
yeah,
Yeah, you're absolutely right, actually, because yeah, they wouldn't make money, well, because people aren't trading a lot.
yeah, exactly. No one's gonna churn that account.
No, that's very true. That's very true. There's probably something out there that does it, but I've never discovered it.
Exactly. The other thing that I was looking at, are ETFs, and I don't know if
Yes,
you know. I don't know if you know about this. I don't remember the name of the company that created this ETF, but it's quite. I mean, I really like the way that they formed this ETF, because you can. I mean, they're invested in tech. So you have an ETF for fintech, an ETF for e-commerce, and they're not quite new, but they've been around for about 5 years or so.
I
But
know exactly what you're talking about. Yeah, you get a basket of companies where they buy Facebook, Amazon, Apple, and all of them,
yeah,
but you
I'll
get
show you
all of
right
them
now.
rolled in. Yeah. Oh, you show us? Yeah, cool.
Yeah. So it's the name of this. It's not iShares. Quite new. Let me give me just a second. I'll find it.
Yeah, no problem.
Uh, Here you go. It's called Arc Invest, and they have this ETF, right? Fintech, and the ones that I've seen is fintech and Arc Innovations and Generation Internet. But the description of their business is what caught me. They invest in I don't know how they formulate the technology. Well, whatever. Let me show you the ETF, the fintech ETF.
Yeah, let's have a look.
It's
I've
this
got
one right here. It's called Arc F, right? And this is and I
Arc.
mean they've been around. I mean I know it's actually I don't know since when, but it's been rallying, right? And these are the companies they're investing in. Square, Mercado Libre,
Mm.
Pinterest, Zillow, Alibaba, etc. And the cool thing about this ETF is that you can, I mean, it's not that expensive right now. It's at what, $44, and
Have
you
you seen
get
what they've moved up since the March lows? They're up 150%.
yeah. I mean that was crazy. Yeah, and the reason that I learned about this ETF was actually because of how strong it was moving, right? And I heard about it or I read about it. I don't know the publication, but I started to look into it. And the cool thing is that you get exposure to all of these cool companies, that I mean, just look at Mercado Libre's market price, 1,200 bucks. You know, add in 1,700 bucks, etc. You get exposure to all these companies
Do you
through
know,
this
mate?
ETF.
That's a really interesting ETF because if you were to compare that to the Nasdaq, which obviously we're talking about those Nasdaq stocks, the
Uh-huh.
Nasdaq since the March lows is up to around about 70%. So this has outstripped the Nasdaq by double,
Yeah,
which is astonishing, isn't it?
it is astonishing. It is, mate. It is. It is. I mean, it's insane, right?
Yeah.
And this is just one of them. They who do have index ETFs, but I mean, I haven't read about them. The Arc Innovation ETF. This is the thing. Arc defines disruptive innovations as the introduction of a technology-enabled new product or service that potentially changes the way the world works. So fundamentally, it captures me.
Oh yeah.
And yeah, and if you look at the companies that they're invested, this is only the top 10 holdings. Of course, these are not only the companies that they're invested in, but you get exposure to companies that have a huge potential, for a very low price. This is what
This is
no, this
this
is
this is the
$100, but still,
It's astonishing, mate. I mean, just looking in the last decade alone, they're up 575%, and since 2009, they're up 877%. So, a cool thousand would have made you a near million in
yeah.
a matter of 11 years, which is just it is
This is
just
insane.
astonishing.
And it is kind of upsetting that we're just looking into this right now.
Oh God, yeah. Do you know? And you're absolutely right. And I think a big question here is when do we start getting worried about tech? When does because the tech boom just this year, forgetting the fact that Arc are up, near 900% in the last 11 years. When do we start going? There's just no specific retracement that you could say there's foundation for the moves that we
No,
have to the upside. Now, I would have thought this is similar to the dot-com bubble, where
yeah.
tech just flies and flies and flies and flies, but then has these just astonishing retracements that affect crashes. In fact, that they have to be called. So these crazy crashes. When do we start getting concerned that tech is just getting into that kind of bubble kind of bubble kind of area?
I got concerned about that exactly last year or at the beginning of this year when I started to look into the overweight of some companies, based on their balance sheet and
Yeah.
how, I mean, because I couldn't understand how a company was returning over 50% in 3 months if they were not turning a profit.
Mm,
I could not understand
mm.
that. I really couldn't understand that. So I started to dig into it, and the more I read about it, the scarier it got, mate. I mean, the scarier it got, in the sense that let me see. I do think that I have some of those charts right here. Let me just look for them because actually they're quite interesting. Here's one. So I have the S&P valuation dispersation on forward PE. No, that's not the one. Hold on. It might take me a little while, mate, but
No
I'll
problem.
show you. No, it's pre-pandemic, I think. So hold on. Yeah. Mm-mm. Uh, I hope I find it because I mean, it was really interesting.
Well, it's an
Internet
article.
stock PE ratio. So here's one. Let me just open the link. Yes, right here. So the Nasdaq Internet Index aggregate calculation. So this is on 2020, and this is just internet stocks PE ratio, right? Here's one, and here, so here's one. Where's the other one? Oh, here's the other one. The S&P versus profit margins, right? Look at the this wide gap between the actual valuation of the S&P and the profit margins of the companies within the S&P 500. I mean, it is crazy. Talking about a bubble at this moment in time is really not crazy, in my opinion, mate. Just by looking at this data, and also it got. I mean, I started to think about how fabricated these moves are based on liquidity, because liquidity does not equal profitability. You know, how long can the liquidity withstand um, or hold the market up? You know, I mean, not talking only about tech right now, but the broader markets, right? But yeah.
Yeah, I think we are talking about the broader markets, and I also think, you know, where we've got Biden coming in, that also, you know, brings the whole picture into an interesting space. You know, we got these talks on hold right now, but the stimulus talks on hold right now. But obviously there is a quite a big anticipation. There's quite a large anticipation that those stimulus talks will
Hmm.
result in positivity after the election again, and it seems that markets are quite happy to hold on here. But you know, I'd like to short the Nasdaq, but I'd really like to see the all-time highs again and just hit the button. Because especially if it's just before the election. And Nasdaq, I think, is interesting today. I'm looking on the hourly chart, and I am seeing a head and shoulders pattern forming, and the potential for yeah, you got it right. Is that the yeah, the head and shoulders pattern forming. So
Yeah.
there is some distribution going on here. There are some people that look like they're taking some profit here. I
Yeah,
don't
and
think
this
it's
move is
anything.
clearly overextended.
Yes, I think it is. I don't think there's anything more sinister than some profit taking going on. I don't think you know, anybody's looking to reverse the trend per se. But I would have been a lot more comfortable if this had hit the highs that we saw back in, when is it? Yeah, I'd
Back
be
in
comfortable with,
September 1st.
yes, September 1st. If this pattern was happening there, I'd have a really comfortable short on. I'd be quite happy to take it.
And
At
you know
this
what?
level, do
At
you know,
that level, I was looking at a short too yesterday. In fact, oh mama, hold on, let me just go back. All right, at this exact level, just look at how it respected this. I mean, this base. Um,
yeah,
this base back in September 1st, right?
yeah,
And I was exactly mate, looking at a possibility for a short-term short, let's call it, uh, at the breakout of a pattern that I had drawn here. Um, but I mean, we couldn't. I mean, yesterday we were able to break with these lows, which were the daily lows, and we got that bounce back from that daily low, which I mean, eliminated my idea. But still, it looks appetizing in the sense that there is some structure.
yeah,
I mean, it looks heavy in the sense that I don't see any real bullish strength to try to break with that 12 300 or whatever,
yeah,
and every time that we get there, we get smashed down. But yeah, I mean, this little range that we got going on is key in my opinion, right? I mean,
yeah, yeah. Do you know my issue really with it is that uh, because it's been so long since we've seen that. So, you know, it's been over a month now since we've seen those highs. Um,
mhm.
I, I don't know whether I could trust an hourly pattern because isn't that on an hourly chart that you got there?
Yeah, it is.
So
It is hourly, exactly.
yeah, so because it's that is an obvious support and resistance rejection on the hourly chart from the 1st of September. But if it was on the 4 hourly, maybe so. I'd much prefer it on the daily. I could just see us kind of breaking through here and going. But what we were saying about if it breaks through that high, remember we were talking last week and we were saying if it breaks through that high, you want to get on board. Hasn't retraced enough as it just went. It's
It
just like
hasn't. It didn't. It
yeah.
didn't.
Just no opportunity to trade this to the upside, which has been a little frustrating.
Now, if we get that retracement made, this is going to be a massive opportunity to buy the Nasdaq.
Agreed. Yeah. And you know what would be fantastic, which is another reason why I quite like the short opportunity here, is a short to go long trade. So you could go short here, hold on to it right the way down to that support level, buy it
Buy
back up
here.
again. Yeah, put a stop loss on the short exactly where you entered. You got no risk, and then you're off.
Yeah, I like that play. I mean, that play, I really like that play, that hedge play
Yeah,
on that you're talking about. Really, really good.
yeah.
But
Because you can't
yeah,
lose, can you? You can't lose, and you've if as long as you can only lose the short, the first short. If you can get the
yeah, the
short
first
on,
short at the top of the move, right here. That's the only one that you can lose because
yeah,
I mean, if you buy here and you get stopped out, that stop loss is hedged with the move that you're riding
exactly,
from the top. So yeah, I
exactly.
do like. I mean, I really, really do like that
Well,
idea.
I think the
And
thing is that do you know the way I play things like that is that I wouldn't put a stop on. I don't put a stop on the buy.
buy, yeah.
What I would do is I sell it. So I'd want to sell it here. I'd want to buy it back at the level that you've indicated as a support line. And if it
Yeah.
goes lower, that's where the trade is closed because it hasn't done what I wanted to do, and the profit is made from the short from the upper level.
Oh, I
Yeah,
understand. Okay. If price goes all the way to this level, you buy here, and if it
yeah,
continues to dip, you close the entire hedge,
yeah,
and I mean, you wouldn't. I see why. I see why because let me guide you through my thought process to see if I'm correct, right? Because
yeah,
if you put a stop loss on your buy, that would mean that you would actually incur in a loss and the possibility of a pullback.
yes.
I mean, you would erase the profits of the first short, or not all the profit, but some of the profits would be erased. And if you close here, because this is hedged, there's no erasing profits.
Yeah, but your profit is from the point that you've sold at to the point you buy
Yeah.
at. So yeah, your profit is to the support level. But the reason that I close there is that then you're starting to get into a different phase. So it starts to become. I mean, because I've tried it. I've tried this a few different ways, and I've always found that if I as soon as the market kind of goes. As soon as the market doesn't bounce, then you are then guessing where you're going to come out. Do you close your long position and then with a possibility of a bounce back? Do you do you leave the long position open and then try and buy at a lower level? So you're basically doubled up on the upside now, but leaving that long short in the process. It just becomes a headache. So what I've found
Mhm.
is that the best way to do it is that you sell here, you buy back at the support line, you put a stop loss on the sell at break even. If it goes up, then and takes your stop loss out, then if the market continues, you've got a free trade long. If it goes down, as it goes up and if it takes the stop loss out on the sell, then you put a stop loss at break even on the buy. So you can't lose the trade either way at that point. But if it
Yeah.
starts to break down, I just think get out and try and get a new entry later on and look at the market in a different way. Because the likelihood is if if you've bought at support, if you bought at a really good price, and the good thing about doing it that way is that you're not waiting for a pattern or a signal. You're just buying
Mhm.
price. So if you buy
Yeah.
if you buy at the support line and it breaks it down, you can close the position because you may well get a signal which suggests then that you may well be going lower, which is a
Mhm.
retracement to the support line, and then you just start again. It is one of my favorite trades, but it's it's a tricky one.
Yeah, I have. I mean, I've tried hedges myself, but it's not my bread and butter. It's not my bread and butter.
Yeah.
But that, I mean, that play, I mean, it's completely logical to me.
Yeah, yeah. No,
I know.
it's not mine either, to be fair, mate. It's just it's something that I will do if I see the opportunity. It's because this is the thing about the market, isn't it? There's never one approach. There can't be one
Mhm.
approach if you're sitting in front of the market day in, day out. If you are, sort of like waiting for your particular setup, then you shouldn't really be in front of the market day in, day out. It's just to drive you mad because the
Yeah,
market just doesn't offer you those opportunities.
I agree with you. I agree with you. But I mean, but even talking about this particular play, uh, it I mean it has some kind of rules that you follow and setups that you follow. I mean, it's not a blind hedge, let's call it.
No, absolutely right. Yeah, I would follow specific parameters there. Yeah.
Another market that I was looking at is gold. And pretty quickly, I wanted to share this with you. Uh, I mean, just now waking up, I was looking at this right here. Pretty interesting how we rejected this level, the 1888 level, right here in gold. Again, it's not something that I would consider buying, not even if we break with these highs. But I mean, it's quite. I think it's important to notice that we did got some very strong rejection out of this level.
Mm. I really like gold and silver for a long, but it still looks just a bit too early. It's
Hmm.
I'd really like it. I wonder whether we just get that little bit more strength in the dollar. We come back down, maybe on gold. We at least test the 1850 level again.
Yeah, that would be
But
great.
1750 would be the money shot. I mean, if 1750 was available, then I'd probably buy fairly fairly swiftly at that particular level. But
1750, right
yeah,
around this level.
yeah, because of the weekly, that's where I see some weekly support on gold.
Oh, I
Yeah,
see what
around
you
a,
mean. Yeah, I
yeah,
see what you mean. I mean, this is a slam dunk level, and if we go back in historic price action, a better, well, I think that we're definitely going to get some kind of similar reaction in historic price action to those levels right here.
yeah,
Yeah,
yeah.
I
That
mean
that look
that
actually
would be
that
a
that
very good trade.
1800 actually. You drawing that back there, the 1800 level looks really good, doesn't it?
Yeah, definitely. I mean,
Around 1780, 1800
yeah,
would look like a great price to try and buy some of this.
I'm even going to put on an alert.
Yeah.
But yeah, I
Good
mean,
idea.
definitely. Uh, and when we go, to the higher time frames, it really looks that buying gold at these levels might be a little bit too early, right?
Yeah, yeah, exactly. And even scaling in at this area still looks too early because again, gold's quite similar, isn't it? Where we've just looked at the where we just looked at the Nasdaq, and the Nasdaq's move has been so parabolic that you just think, well, how's it got any foundation to stay up here?
Yeah,
Similar kind of thing with gold. When gold took off, it took off in a pretty extreme way. Um, but there's no saying that it's coming down from this particular point. But it would be fantastic if it did. And it's one of those things. The market never does what you think it's going to do.
never.
And it's that, which is why you've really got to be on your metal every time and make sure you're protected. But so for that reason, gold could actually rally here and not come back for another year. But it would be fantastic if it did start to come down from here.
But what do you think about the volatility coming up with the U.S. presidential election? That might
Well,
get
yeah, I
that
mean,
might
I've been looking at that too, to
the
be honest.
downside.
And I've been looking at the VIX for that very reason. And I saw a little bit of a pop in the VIX yesterday, and an interesting little pop. But and you know, you talk about levels holding. The VIX has managed to hold a fairly significant level as well. If you look at the VIX, there might even be a little bit of a hint of an inverted head and shoulders forming on the weekly.
Let's go see the weekly right now.
Yeah, it's a little bit scruffy, but that's just the VIX. That's the nature of the VIX, that it is a very, very scruffy looking chart.
Yeah,
But you know, could be a little inverted head and shoulders forming there on the VIX, and yeah, I wonder
right
whether we
here.
might. Yeah, yeah. Yeah, it would certainly suggest that you know, and whether we perceive that as an inverted head and shoulders, that the point is there does look to be some accumulation down here at
Yeah,
these particular
definitely.
price levels, not able to go through there. So so it would suggest that there's some more volatility coming. And as I say, the market never does what you think it's going to do. And while we've got all this quiet going on with stimulus being talked about, Biden almost being a shoo-in, you know, it very rarely just kind of like walks along like that. So you're almost expecting the unexpected at this stage, or I certainly am. So I think there's a pretty good chance that we do get a day or so of heightened volatility.
Yeah,
It doesn't appear to be today at this stage, but you just don't know. And the thing is, it will probably be something to do with Trump rather than Biden or anything else. Trump managed to create some volatility a few weeks ago, didn't he? Or last week actually, or few days ago
with
with
that tweet
the
that with the tweet that he's not going to be negotiating more stimulus
yes,
package after the election. Yeah, that's the tweet that got some volatility into the market,
yeah,
and it got us. Let's have a look. That buy opportunity. Right, where was it? This 10-minute chart. Sorry, mate. 4 hour
no
chart.
problem.
Right here. So we had that big spike down, and then boom,
Yes, yes,
just rallying.
yeah, yeah,
So, but with this presidential election, I want to be more prepared than I was with the last one. You know,
yeah,
with the past presidential election, I was still not too comfortable trading volatility, right? So
mm,
I stayed away from that move, which happened to be a very good buy opportunity in U.S. equities, right? So
mm-hmm,
for these elections, I think that I'm really prepared for to take action if a scenario similar to the past elections happen. You know, I'm going to be looking at a big move to the downside as a buy opportunity into some massive weekly levels. So just as the past election, but I don't know if that is going to happen if Biden wins or if Trump wins. I haven't given it too much thought of, just yet on how the market could be reacting, because eventually what the market hates is uncertainty, right? And
yes,
it really doesn't matter if one wins or the other win. What the market hates and when the market starts to crash is when there's big uncertainty.
yes,
Uh, but then again, if Trump wins, I think that the possibility for a rally is higher because of what he said about the stimulus package, and he winning is going to bring back more liquidity into the market more quickly.
yeah, yeah,
But I don't know.
agreed.
But in any case, heads up to that.
Yeah. Sorry, so, Sino, I've just seen your question, mate. The could I explain the method strategy rule again? Yes, I will show you. I'll show you. Just grab the screen for a moment here, buddy.
Yeah.
Okay, so let me draw it first, just so you can see it. So what we've got right now is a potential buy. Now you get, sorry, a potential sell with the Nasdaq. You've got to get the first bit right. So if there is a market which has done something like this, where you've got a support level here, and it's coming up here, and then it creates the little head and shoulders going on there, and I'm sort of like thinking I'd like to buy. You know, it hasn't given me any retracement. It just took off at that particular point, but I'd like to buy here. But I'd like to buy without a signal. So I just want to put a buy order in at that particular point. But I'm not just going to put a buy order in. I'm going to see if I can get a free trade coming in. So if I can sell it here, so I sell here, price comes down, and at this point now I'm making money. Now I'm making money. Now I'm making money. Now I'm making money. Let's say we got a 100 pip move or whatever, and we put $1 on. In fact, let's just talk in pip points. So we're up 100 pips, okay, from this point to this point. Now I'm going to buy it. You know, just because it's hit my support line, not for any other reason. I'm just going to buy it here. Now, what's happened is this buy has almost reacted, apart from the spread, which is a couple of pips. The buy has acted like closing the trade. So now I'm up plus 98. So I've had to give up a couple because of the spread. But I'm up plus 98. Now, if it bounces, starts to bounce, what I can do is put this one at break even. So I'm just going to put a stop loss on that one. Now, there's a few different ways to play this, but let's just talk about the first method. So this one goes at break even. Now, if that stop gets hit, now I'm up plus 98 on the upside because I bought down here. And then I put this at break even. So whatever happens from here on in, I'm free trading to the upside and I'm with the trend. All because I sold at the right area. Now there is another way to play it, which I'll go. In fact, there's two other potential things that can happen here, which you can also do. So now you're up 100 pips down here. You bought here, so now you're on the 98 pips, and it goes up, comes back, and at this point I can move my short there, which means that I'm making money on the buy at that point rather than at this point. And as soon as this gets taken out, then I've still got a break-even trade there. Now, what could happen is that might happen. So what might end up happening is you only make that. But if you really believe in the uptrend and you get an area that that things have to change, then you can move the stop down a little bit lower. So you don't have to leave your break-even right to the top. So you can almost trade it kind of conventionally, but your idea is that you're trying to get the long. You know, you don't want the short. It's the long that you're really after. So it doesn't really matter what you do there. Now, the other thing that could happen is that the price starts coming down here. Now, if I put a stop loss on the buy and I'm still in the sell, and then I get stopped out here, so I'm down 10, and then it starts to pop back up again, then I've lost another 10. And then I'm in all sorts of kind of like a bit of a minefield here, and it's just like really difficult for the heads. So what I've kind of learned is that the best way to play this is if you are wrong on your level, if it doesn't hold. No, you want to give it some time, and you got all the time in the world at this point, but you want to give it some time because it can do something like that. But if it really starts to break down, best thing to do is just close the trade off and take your 98. But you can let this develop down here, because as soon as it starts going up again, your stop loss is far enough away, your break even is far enough away that this can just go, and you can ignore it. You can ignore it for a few days and go and trade something else for a while, and see if your price does end up holding, because there's no guarantee it's just going to bounce off that price. It might come down a bit, go up a bit, come down a bit, and then start going. Might even need to create the reversal pattern down there. But I don't wait for that, because I don't care about it. I've got the luxury now of not having to watch the charts and wait for a reversal pattern and do all that stuff. I'm just literally just going to trade the price. Short has no take profit. No. Yeah, it can be used on anything. You can use it on absolutely anything. The short doesn't have a take profit. The short does only have a stop loss. Nothing has a take profit in actual fact. So your stop loss on that would be there. And what you're trying to do is just get a big move and then flip positions. I kind of I call it the flip. That's the kind of method that I'm doing. I'm just flipping positions. I'm flipping to the upside from that particular point. It's not a strategy. It's a money management system. So if we would now bring in that with the Nasdaq, that particular play into the Nasdaq, then the idea would be, now of course you've got to be right on the money with your short. The idea would be short here, somewhere, let's say under that bar maybe, whatever it is, with a long here. So as soon as the short is in, then your buy order is triggered. Now that move to the downside is 400 pips. It's a lot bigger, but you know where you enter and where you get out and how you manage it, it isn't what this is about. This is about how you'd manage the trade if you manage to kind of get going. So you go short here and you buy here, and what you're looking for is that to happen. Stops at break even. So stop loss is put in when this is triggered. The stop loss is put in, not before the move to break even. And then if the stop loss gets taken out, then you've got all this that was already in the bank and more. And then you just managing to trail, you know, just kind of moving stops behind it. So you just got a free trade. That's what you're trying to get. And it work in my experience, it works best. I mean, do you know what? It would work quite nicely with gold right now. But it works best in things like equities, because equities tend to go up. You know, the kind of the default for an equity is for it to go up. So you know, let's say you did the same thing here, and you managed to kind of like sell this level up here somewhere. You sold there with an idea to buy here. As soon as it starts breaking down, I'm closing both positions. Now the buy will be in a big loss. Sorry, the buy will be in a loss, but the sell will be in a big win. You know, but actually, what your profit is this area here. And don't get romanced by thinking that you're going to be able to kind of like pick the right low and you know mess about with it. Just it's very, you know, it's very simple that you just follow. Very important that you just follow the rule of you buy there, and if it doesn't do what you hoped it would do, like bounce, close both positions. If it bounces, then you've got something that you can trade, and you'll be free trading straight away. As soon as you're triggered in the buy, you're free trading.
Interesting concept, man.
What's that? Sorry, buddy.
Interesting concept, I tell you.
Yeah, and this is the thing, you know, you could do this right now. The only other market that I would toy with doing it on right now would be gold, because gold, you know, it is similar. Where if we were looking for that 17 or 1800 level, whatever it was that we chose out, let's just have a quick look what it was around here, wasn't it?
Yeah,
1800, yeah. So around about the 1880 at 1800 level. So if there was an opportunity to sell gold into that 1800, then effectively, you know, that's your freebie. You know, you do the same thing where you could sell somewhere around here, buy back here, and then just see if you can get a free trade with gold to the upside.
Makes complete sense. Makes complete sense, actually.
Yeah, and do you know where it can work? It does start to get sort of, you can get really creative with it, where you sort of like go, I'm going to sell here, it comes down, and I'm going to sell here, and it comes down, and I'm going to sell here. You know, this would be the ideal scenario. Now at this point, you're kind of you're tripled in, which means this position can be one huge position in a way.
Yeah.
You know, you're kind of fully invested, and then you got a really good trend. So if you can pick up a trend in the opposite direction and play it, then it can become really interesting. But the key is to manage the money correctly on the way down. You know, putting stop losses in place, and you know, and just buying it back. But the overall and overriding aspect of this is that you are following the long-term trend. That's all you're trying to do. Get in with a long-term trend and see if you can trade. You're basically, you know, you're trading the retracement, but you're trading the retracement to flip positions and go long.
To allow yourself to get into a massive position at your key level.
Yes. Yes, with no stress.
With no stress, because you're in profits already. I mean, that's an interesting, very interesting concept, mate. Of course, that nobody should go into trading that live without really testing it out, because I mean, it's not a 1, 2, 3 system, right?
No, it's not. And actually, if what you've got to get good at is trading retracements. That's the key aspect of this. You know, it's sort of you are going to be counter trend trading for the first trade, and it makes it really difficult. So even though when you get it right, you get a free trade, the amount that you're going to get wrong are quite high, because you are counter trend trading. You know, because we're going against the trend here. We'd have to go against the trend on the Nasdaq as well. So it becomes you know, that we'd have to go against that trend. So it becomes quite dangerous in many respects. So you've got to make sure that you trade it correctly, which is why actually it is better to scale in by the time you get to this position, because you can go in light, you know, all the way up. You can go in really light, but
Yeah,
it's not
I've
easy.
seen the way that you do that. I mean, and I have to tell you that when I don't remember when it was or what you were trading, but you explained why you do that. That you first go light and allow yourself or allow your trade to breathe and if it goes if it doesn't go in your direction, you can sell higher because of
Yeah.
the position size that you took at that time.
Yes.
And the thing about that, I have been playing around with that concept, with that idea for the past few weeks. Not live, of course, but just testing and back testing it out. And it amazed me that I mean, by doing that, yes, sometimes you're going to get very little profits out of a trade if it starts going in your direction immediately. But then
Yes.
again, you're going to have much less trades stopped out
Yes.
because you have that I mean that margin, let's call it.
Yes, yes, absolutely. And the other thing is that yeah, you don't get the rewards when it goes your way. You don't get the rewards,
When it
and the
goes
only way
against
you
you.
can get the rewards is by scaling in when it comes down. But you're still getting a worse price at that point. So yeah, it's just a different way to look at it. Really, it's just you know, two different ways that I would that's the way that I manage trades, and that's the way that I manage my money.
Yeah, and I mean it's very interesting. Like I told you, I've been playing around with that concept, and I mean I am not going to implement it in my live trading, but I'm always keen on looking on how other people manage their money, manage their risk, and to
Yeah,
see if it makes sense to me, right? And
yeah,
this does make sense to me.
yeah, yeah. Um, okay, mate. Well, I reckon we're pretty much wrapped up. Thanks so much for coming in, buddy. I was it was a
Thank
bit
you
of a
for having
surprise
me,
when.
mate.
Oh no, it's always a pleasure. But yeah, just I wasn't sure what the situation was today. So to hear your voice on the other end it's always a bonus for me. I really like our sessions. So really
Thank
appreciate it,
you.
mate.
Yeah, I mean, I'm always going to be here on a Wednesday, right?
Fantastic,
For this
fantastic,
show.
brilliant. Okay, mate. All right. Well, what time is it where you are?
It's 2 a.m., mate.
2 a.m. All right, go get some sleep.
I
Um,
can't. I mean, normally I wake up at 2:30, 3 a.m. And I mean, right now I've just had 2 cups of coffee. I'm not gonna get anything of sleep right now, mate.
okay. All right, buddy. All right. Well, enjoy the rest of your day.
Thank you, you
Yeah,
too, man.
you have to work through the night because that's when the market's open, right?
Exactly.
All
But
right.
I mean, I'm used to it. I mean, I do. Normally I wake up around 2:30, and I sleep 2 hours between 4:30 and no, actually 1 hour, and then I mean my sleeping schedule. You don't want to hear about it, but I'm used to it.
Okay. All right, dude. All right. We'll have a good one. And for everyone else, have a good one too. We'll be back with Jeff tomorrow. I'll be back at 1:30 for the pre-US show, and then obviously the US show at 2 o'clock. So everyone else that isn't in either of those shows, I'll see you tomorrow at 5 to 8. Thanks so much again for Orlando. Thanks to you
Thank you,
guys.
mate.